All right. Hello, Mish.
Hey,
Welcome back. I hope you're not too tired from the Super Bowl because my idea today is kind of a rapid fire with individual stocks. But before we go there, um, how are you feeling just in general about the market?
well, it's still pretty much a stock picker's market because if you look at the actual indices and particularly the economic modern family, not only are we starting happily not way down and then rallying like we had for the last two Mondays, but we're still starting sort of in the middle of the range of last week with some big numbers coming up this week, CPI, PPI, and retail sales. So what that tells me is that from a macro standpoint, we're still extremely undecided. So how I'm feeling is, on one level, I like that because you can plan. On the other level, it's making it frustrating and a little bit scary to buy some of these stocks, but that's why we're going to talk to you today about what to look for.
Yeah, that and the index are just so boring right now until the end of the week. So
Like the
here's
Super Bowl game.
so here's what I thought we could do. Something we haven't done before. We both talk a lot about the calendar ranges, but we don't talk about this. So if you are a member of Calendar Ranges, you have access to this scanner. It's relatively new. And there's a sectors page and there's a stock page. So I just went to the stocks page and I sorted by this column, J&J-A. So J&J stands for January and July. That's the 6-month calendar ranges. And A means that there's an alert. And the alert just means that it is straddling the calendar range. So in this case, it's straddling the January calendar range. And the other thing you can do, we're a big fan of phases, is you can look to see if there's also a phase change. And if there is a phase change, it'll be highlighted. So in this case, we have lift that is changing into a bull phase, and it should also be um, straddling its January range. So let's just start with that one. And the idea here is these may not be great setups, but they're definitely at inflection points. So this one, we can see that, I'll grab my pen quickly. This is yesterday's close. This is the 50, which is the blue line. This is the January calendar range high. So it's gone from below both of those to above it, and that's why it gets highlighted in the scan. So with that, um, if someone came to you and said, well, what do you think of Lyft? How would you break this down? What would your answer be?
Well, my first answer would be that Uber's taken off, so this could be a little bit of a sympathy trade. I don't even know if that's the right word, but that's number
Good
one. So you
point.
should be aware of the story. But number two, and more importantly, would be that doesn't matter because the way this sets up, and I really love when I have more than one indicator flashing at the same time. So with the change to bull phase and also above the 6-month calendar range, I would just simply say you look at phases and I like a second day confirmation. And my goodness, we've seen so many examples of phase changes that fail the next day. So that's what I would say is if this looks good, holds the 6-month calendar range high, holds the 50-day moving average, you got a pretty good risk point there under the 10 and the 200. And regardless of what you think about Lyft versus Uber, could be an interesting trade.
Yeah, that's definitely an interesting looking chart. So let's just go back quickly to the scan here. Oh, Cliff,
Yeah,
Cleveland Cliffs here. And now this isn't a bull phase, this is a recovery phase. So that's going to mean
my particular favorite phase, actually.
that's, yeah.
Yeah. Well, this, I mean, again, I always like to know the story. So the story was Trump announced tariffs on steel and aluminum. And this is, a big steel-based company. So whammo, it went going. So the question is what we would do now. Well, ideally would be after it breaks out over the 50, and you need that second day confirmation, and of course over the 6-month calendar range high, is maybe some kind of a consolidation day, maybe some kind of an inside day digestion to today, and then you might have to wait the third day. If that doesn't happen, if this gaps again tomorrow, then you have to kind of be wary of that 200-day moving average right above it, and you don't want to run into that resistance. So I would say from a trading standpoint, this might be a little bit more difficult than what we just saw with Lyft.
Yeah, I think it is. A quick way to get in if you're really nimble. Big range. Where's the floor trader pivot? If you can get an opening range reversal at the floor trader pivot and a stop under that as a day trade. And if it works out, great. If it doesn't, then wait till next time. But I agree. Like this level here is ultimately your best level of support, and that's a long way from where we are right now. Um, so I agree, kind of a wait and see here. One thing before we leave this chart, real motion broke out over the 200, and we're not even close to the 200. That is generally a good indication that in the coming weeks, as long as this thing holds up, we're gonna wind up getting one of our big time frame divergences. They take a long time to play out, but for me, this is one of those patterns where I would say it's hard to get in right now, but should probably keep an eye on this thing because it's a base that um, is diverging already.
And it's a commodity-based company, and this so far has been the year of the commodities after years of a down move. So it's another example of just exactly what you just said, Geoff, that this just could be another start of another commodity play that's going to go much higher. And of course, we know what that means. It means that the interpretation of the tariffs that have been imposed are looking more inflationary.
Yeah, well, this is definitely going to be one of the benefactors if that turns out to be the case. All right, so let's look down at the list. We can't go over all of them. IYT, Modern Family member,
Exactly.
bullish phase, sitting on its calendar range. Let's
Now,
take
this wasn't a phase change today, though, right?
no. Bullish phase, but not a phase change.
All right.
Yeah.
Okay. Okay.
So this is getting flagged because it's gone from below to above the calendar range. It's not a fresh breakout, but it's above it.
So let's not forget that this has a lot of Uber influence and Lyft for that matter. So
Right.
from a macro standpoint, we know that two companies that basically are really about not only food deliveries, but robo-taxiing and things like that can't carry a whole sector of transportation because there's so much more to it than that. But again, that's the story. To me, this would be a good example, not only of a confirmation that if we get another day close above that 6-month calendar range, especially if you watch the rest of the economic modern family, but this could be the leader of the family. We've seen it happen before. We've seen this be the first one after a big downturn to go up, and we've seen this after a big up move to go down. So right now, with the modern family kind of stuck in the middle of their ranges, I would look to this for some kind of leadership.
And I would be looking at this line right here.
Mm.
Just because it's a prior swing high that seems to the area was important here, is relatively important here, kind of important here. So up over 72, that line in the sand looks on a second close over there, that second close over the calendar range, I'd want it to be over that too.
Yeah, and I think we have to also say that if this fails, this move today, that would not be such a good thing.
All of these for sure. Like one close over the range and then back underneath. That is definitely not what you want to see.
Right.
All right. So jumping back to the list, there was Home Depot. That's a phase change and a calendar range change. Let's take a look at that one. Have to get my pen out of the way. All right, so this one is coming up over through the 50 and through the calendar range high as we've been talking about.
Yeah, and if you zoom out on this one, because Jeff and I were talking before we got on to record, is that you've had a series of lower highs since that peak high in November. And so there's a couple of things when you have a situation like that, particularly when your momentum is kind of like there, but not quite there yet. So if you zoom out on that chart again,
Even like zoom like
no,
this.
no, out, spread. Yeah, there you go. This was certainly a nice move today, but the last swing high that we saw really was the one that we saw in January, right? That last one. You see that high?
This one.
Yeah, that one. And so I would be wary of that, but that wouldn't mean that I wouldn't get into this trade. I would definitely want to see the second day confirmation of A, the phase change, and B, the holding of the 6-month calendar range. And I probably want to see it at least get through the bodies of the two candles from last week. The one on Wednesday, the one on Thursday, yeah, right above there, because that would also be above today's high. And then maybe I would do a nibble on this trade. I wouldn't go in gangbusters.
Yeah, I totally agree. The couple things that I'll point out. One, down move. So we got over the range, broke down, but the market did this in general today and immediately reversed. And we're closing almost over today's high, which the rest of the market isn't doing. And then I'm going to point out the same exact level as in the other chart because I always look for these levels, which is it's the swing high before the ultimate high. And this is the same level we just looked at that other chart. It's significant here. It was significant here. I mean, we got through it a little bit here, but not really. That's a problem area.
Mm-hmm.
So this is a tough one.
Yeah, and it's an expensive stock, so it's going to be volatile potentially.
It's also doing what the market's doing, which is pretty much nothing for the last month. Pretty frustrating.
Yeah.
Um, all right, one more because I'm saving this one for last because this had everything. BBY, where was it here?
It-
Shoot.
Down towards the bottom of the list, Best Buy. Oh, maybe it was on
Yeah,
page.
here it is.
Right.
Um, so wait a minute. It's not what I remember, but let's look.
Yeah.
Yeah. Um, so this thing is a phase change on the 200. It's a phase change on the 50, and it's breaking out over the calendar range. And so, but this one isn't necessarily so easy. What do you think?
Well, that same level we were talking about, again, if you draw sort of that line, that up around 90, is that what it is? There's a lot of
Yeah.
resistance up there at 90. So, this would be another one where, A, you must have a confirmation, which means you must have a second close tomorrow over the calendar range high at the very least, and the moving averages. And then I would be maybe, I mean, if this is going to be good, it should take out 90. So I wouldn't feel like a FOMO here. I would probably also want to see it take out 90. And if it does, your risk is to about 85. So a $5 risk on a $90 stock is not crazy. So, because if it's good, you can see this thing can go easily back up to 100 or possibly higher. And, from a fundamental standpoint, Best Buy, you know, I, I know that there are so much competition in terms of where people buy appliances and electronics, but who knows, right? You just never know what the story is that emerges. They could announce some AI thing and then this thing can explode.
Maybe the Geek Squad is now actually going to be ChatGPT or something.
Right. You just don't know.
And the stock will double. Uh, well, one thing to watch out for, I didn't notice this earlier. The real motion here isn't really all that great. Like it's coming through, but This is bearish. And as you point out, we've got a lot of resistance here. This real motion is not all that compelling. Now, we don't talk about this a lot, but I look at it all the time.
Me too, all the time.
No, this one.
Oh, the one on the lower one.
The lower one.
Faster.
And the reason I'm going to bring it up, if I remember correctly, yeah. So this has been diverging for a long time. So the 10 versus the 50, this is a great looking divergence. So this would be a reason I would be keeping an eye on this thing through 90, everything we said. And so a good clean break over the 50 on the upper, the longer time frame, that would be more convincing. But this down here is telling me that probably will happen, but I'd still be patient for all the reasons that we suggested. All right. Well, I think that's enough for today. Certainly, there are some interesting setups, even though the market for right now, and probably will be pretty boring until the inflation numbers come out later this week.
Right. But I think the biggest takeaway from this conversation for people today is that it's great to be a stock picker, but it's even better when you're picking stocks, regardless of what the rest of the market is doing, based on these phase changes and these calendar ranges when they converge. And that is a little bit of my topic in my daily Monday night. So check that out too. Little plug.
Yeah, for sure. All right. Thanks a lot, Mish.
Thanks a lot.
See you next week.
See you next week. Bye, everyone.